Dirty dealings, corporate battles, consumer woes. This is Evening 5. The ringgit climbed to its highest in 6 months against the US dollar and was the best performing major Asian currency today as easing US inflation bolstered the case for Fed rate cuts. The local currency climbed to as high as 4.6630 against the greenback and was last hovering at around 4.6675. The Chinese yuan and Indonesian rupiah also gained, while the Japanese yen, South Korean won and Thai baht depreciated against the US dollar. Australia and New Zealand banking groups said fundamentals are getting better for the local currency amid early signs of broad-based improvement in Malaysia's balance of payment. It sees the goods trade surplus rising in a sustainable manner and a narrowing of the deficit on the financial account owing to higher net foreign direct investment flows. Overall, there would be greater stability for the ringgit, ANZ said, even as it remains unclear if its appreciation is sustainable. The ringgit strengthened by more than 2% after hitting its lowest in more than 2 decades in February. It is still down about 2% against the greenback, tracking depreciation of major Asian currencies amid broad US dollar strength on expectations for fewer Fed rate cuts this year. Budget 2025, the Unity government's third national spending plan, will be tabled in Parliament on October 18th this year. Quoting Communications Minister Fahmi, who is also the current administration's spokesperson, a Bernama report said Prime Minister Datuk Sri Anwar Ibrahim has instructed all ministers to conduct dialogue sessions with their respective ministries and stakeholders in the relevant sectors. He reportedly told a post-cabinet meeting press conference that the Prime Minister's aim is to gather feedback from the industry and stakeholders regarding policies, incentives, programs, implementation, constraints and challenges. Thus, feedback will be reviewed at the Finance Ministry level to ensure it is in line with the Madani Budget 2025. On Tuesday, Anwar said that next year's federal spending plan will continue to focus on the benchmarks set within the Madani economy framework, which includes propelling Malaysia to become a leading economy in Southeast Asia. Shares in Astro Malaysia Holdings plunged to a new record low after it was slapped with an additional tax bill of 734.88 million ringgit. The stock fell as much as 10% or 3 cents to 28 cents. It ended trading at 29 cents, valuing the company at 1.5 billion ringgit. Kenanga Investments Bank warned today that in the worst-case scenario, this additional tax liability will erode Astro shareholders' funds by 65% to 434 million ringgit. Astro's liabilities already exceeded its assets by 13 cents at the end of April, and the tax bill could worsen the deficit to 27 cents if its appeal fails, the House flagged. Kenanga added that if the company fails and raises debt to pay for the additional taxes, its net debt will rise to 3.8 billion ringgit from 3.1 billion ringgit at the end of April, while its gearing will balloon to nearly 10 times from about 2 times. The research house kept its underperform call on the stock, which is equivalent to a sell rating. Shares in Astro have tumbled 29% so far this year. Analysts are largely bearish on Astro, with 8 sell calls followed by 2 hold ratings and 1 buy recommendation. The consensus 12-month target price is now 30 cents. On its part, Astro said there are fair and reasonable grounds to defend against the notices following legal advice. The value of transactions settled via Buy Now Pay Later or BNPL facilities jumped 84.3% year-on-year in the first quarter of 2024. According to the Consumer Credit Oversight Board Task Force, the value of such transactions stood at 2.3 billion ringgit, with transaction volume hitting 29 million, compared to 14 million transactions worth 1.3 billion ringgit in the first quarter of 2023. This was mainly driven by increased demand and familiarity with the usage of the flexible payment schemes. In 2023, BNPL witnessed a steady double-digit growth, with 77.3 million transactions worth 6.2 billion ringgit. The task force said the majority of Malaysia's 3.7 million active BNPL users are young and working adults aged 21 to 45 years. In the first quarter of this year, about 3.8% of these users had overdue payments, compared to 5.8% at the end of the first quarter of 2023. In terms of credit exposure, BNPL recorded an outstanding balance of 1.42 billion ringgit as of the end of the first quarter of 2024, a 34% year-on-year increase from 1.06 billion ringgit at the end of 2023. Of this, 2.8% of the total credit exposure was overdue, with the average overdue amount per customer at 370 ringgit. As of the end of 2023, BNPL made up 0.07% of total household debt. Energy services firm Uzma said it is working with two companies operating in Papua New Guinea to sell hydrocarbon fuel and products. Uzma's 51% owned subsidiary Jannatul Firdaus International signed an expression of interest with refined petroleum products supplier Arafura Energies and services firm Australia New Guinea Service. In an exchange filing, it said the hydrocarbon fuel will be delivered to the two companies at the loading port or the discharge port, depending on the method of delivery chosen under the confirmation notice. According to Uzma, the expression of interest is valid for 1 year, starting from July 12, 2024 until July 11, 2025. Under the expression of interest, the three parties will negotiate a master sale and purchase agreement before signing a confirmation notice for the sale and purchase of a specific quantity of hydrocarbon fuel from time to time. Last month, Uzma also signed an expression of interest with Finnish space technology startup Reorbit Oy to explore and develop collaborative efforts in space satellite solutions. The parties will explore the utilization of a satellite assembly, integration and test facility in Malaysia and launching of a satellite. At today's close, Uzma shares were down 2.6% at 1 ringgit 13 cent, giving it a market capitalization of 491.92 million ringgit.